Okay, can everyone hear me? Well, okay. First of all, I want to thank everyone for coming to this webinar for trendfollowingmentor.com. And really the goal of my webinar is it's about you guys. And it's how can I assist you? And really what the idea is for me really to understand your needs. And part of what I'm going to do in the webinar is I'm going to be answering your questions. I really want to make sure that the volume is working with everyone, and I'm not sure if that's actually happening. So if you guys can send me a chat, I would greatly appreciate it. I want to add another issue is that besides having this webinar now, myself and my colleagues are available for you on a private one-on-one calls, and we can discuss your trading. And really what the goal, my absolute goal is for me, is really to have myself and my colleagues guide you and teach you, and that you're able to trust us and to enhance your trading. So really that's really what the goal is. Let me see, one second, let me just see if we can get these questions answered. Hang on one second. I'm just not sure if all the volume is working. One second. Okay. Well, let me start this way. I think there's a bunch of us on here. Hopefully everyone can hear us. If not, you can send me a chat, and I will be able to. Let me just see if I can figure out how to. Russell? No. Okay. It looks like I believe that the volume is working. So let's start. Basically, what we're going to do is I'm going to make a short preview of trend following, and then I want to take the floor to answer your questions and in order that I can assist you. So basically, before we cover, I have to give you basically a disclaimer, and the disclaimer is that there is risk in trading, and past performance is not indicative of future performance. So I want to get that passed away first, and let's start with actually what's trend following, why trend following really works, proof that trend following works, and then we're going to talk about the concepts of compounding money, and then I'm going to give you some examples of trend following, some actual trades that we're going to jump to Metastock. And then what I'm going to do is I'm going to make myself available for your questions. You can read this as I can read this, but really, what is trend following? I mean, a lot of times people try to make things a lot more complicated than they really are. And in reality, trend following is that prices are either moving higher or moving lower. That's pretty much it. And it's an investment strategy, depending on your time frame, that we're not predicting anything. We're not predicting any price levels or any issues. And all we're really trying to do is jump on a trend. And many ask, where does the trend begin? Where does the trend end? The reality is there is no absolute answer. We're trying to take low-risk bets, and we're trying to figure out where the trend starts. And we know where they end is where the trend starts giving away some of our profits. And the idea with trend following is there's some components here that, first of all, the only way we're going to make money, I don't care what kind of trader you are, if it's a pattern recognition or a swing trader or you name it, but basically you need a trend in order to make money. If there's not a trend, you're not going to be able to sell at higher prices or lower prices if you're going short. And following is really what we do. We're not predicting. We're just letting the market tell us what it wants to do, and we're being available. Why trend following works? Trend following works because we basically have a plan. And in my teaching, I teach you exactly my plan. And my plan doesn't have to be exactly your plan. I would suggest that it becomes something that you internalize to your own opinions and you trade your own risk tolerances. But I give you my plan. Because if you don't really have a plan, you never know where you are or where you're going or what you should be doing or what you should not be doing. And the idea with a plan is that you're going to know exactly what to buy or sell. You're going to exactly know how much to buy or sell. And then you're going to exactly know when to exit with a profit or a loss. And losses are reality. You will have plenty of losses. There is no way to avoid them. Proof that trend following works. I'm going to give you some examples of some trend followers that I would say are not really the norm, because I call it this way. You have the 90%ers and you have the 10%ers. 90% of the people lose money. And these people, it's just short, and you can go to, there's a website called, it's right here, I'll highlight it, it's WISAG, and you can see all different types of trend followers and how they've done and what they've done. But an example is Salim Abraham. He's been going for decades, going since 1988, and he's compounded basically at 14.81%, or you can make it simpler, saying he 17 times his money or his investors' money. Salim doesn't know anything more than you or me, and once you have the tools that we teach, that you possibly can compound money like him. There's another company. This one's been back even longer. It's called Milburn out of Connecticut. They've been around since 1977. That they've basically 65 times the money. It's shocking. It's reality. And this is the whole point of compounding money over long periods of time. Give you some other examples. Tactical. Basically, it's right here. It's David Drew's. He's been at about 18.92% since 1993. Clark Capital, he's been around since, well, actually this program, it's called the Worldwide Program, is since 1997. He's got some other programs since 1993. So he's 7 times the money. You're going to be able to learn these things also, but it's a marathon, and it's not easy. This slide. The whole issue, what we're trying to do, is look to compound money. What does $100,000 look like over 10 years and over 15 years if we're able to compound out at between 10 to 20%, which, as I showed you in the prior slide, it's possible. The actual numbers. If you're able to compound out at 15%, which there are trend followers that understand risk and understand money management and have a plan, that over 10 years, they 4 times the money. Over 15 years, they 8 times the money. You can simply compare this to the stock market and what the stock market has done. And if you want to look over the last 10 years or a rolling period, you haven't really made that much money compared if you're in the S&Ps or in the NASDAQ, and you've gone through a lot of drawdowns. You've gone through 50-some-odd% drawdowns. There will be drawdowns with trend following. Your greatest drawdown is always ahead of you. We're never able to avoid losses, but losses are as natural as making money, as breathing. We are going to have losses, and sometimes they're going to get ugly, and that's why we teach risk management. There's 2 types of trend following in which we teach. There's the basic breakout trades, and then there's the retracement trades. Neither one of them are really rocket science or the holy grail. This is not the key to your success. And many investors and traders seek all these complicated indicators and ideas in order to try to avoid losses or trying to provide certainty. And what I just alluded to before, losses are as normal as making money. You will have plenty of losses. The key is to keep them small. The other reality is that we have uncertainty. We never know what trades are going to work or which ones aren't going to work. And the only certainty when we're trend following is uncertainty. And that's why we utilize a plan. It's similar to if you're going to start a business. You're not just going to go and start. You're going to have a plan. You're going to know exactly what you're doing, and you're going to hopefully keep to the plan. And that's really what the goal that we seek to do. So basically, before we jump to the charts and jump to questions, and hopefully I can get the volume working so I can actually hear your questions, because this is really what the key of this is how I can assist you, how I can understand your needs and my colleagues so we can answer your questions, I just want to make one point. For my process, I started in 1994, and I had people helping me. But it was still a process. It took me a long time to actually internalize what they were trying to teach me. So really what you have is you have really two choices. You can do what I did, and I struggled, in all honesty, and I probably made every mistake possible. Or you can have myself and my colleagues help you, teach you to try, and I'm going to underline the word try because this is not the Holy Grail, that this is not retirement in a box, that you're going to have to do a lot of work, a lot of soul searching, and then we're here to help you as a coach to try to help you develop a consistent money-making strategy. And the idea is that you have the material, that you have me and my colleagues to help you, and hopefully you can avoid my personal experience of almost 2 decades of a learning curve that I actually personally had. Before I jump over to meta stocks, which I'm going to jump right now, is there any questions or anyone have any questions before I go forward? Let me see if I can answer them. Is anybody, let's see if you can raise your hands. I should be able to see this. Questions, 26 of them, okay. But I don't, okay, people hear me. Okay, let's see, yes, yes, yes. Let me get rid of the questions. 1 second, bear with me, guys. Just want to make sure we don't have questions before I start jumping to the actual charts. Let's see if I can make this bigger. Audio is very good. We can hear you. Yes, audio good. 2 seconds, guys. Okay, let me make this bigger. Andrew, in one of your posts, actually, Tish asked this question, and then we're going to jump to some examples of trades that I have a deep-rooted belief in the success of my trading plan over time. How did I get that belief? It's a great question, Tish, and I want to thank you for it. And the answer is twofold. For those of you that don't know that basically Richard Donchian is the father of trend following, and I use this as an example, that he lost all his money in the Great Depression. And he basically started in 1940s, and he was continuing trend following without the use of computers and everything else that we have at our disposal today. And he was using very simple ideas. And he traded until he was in his mid-90s and was compounding money. On another personal level, I don't know, for those of you that read my webpage, that one of the mentors that I had was a dentist who started in 1979. Well, he started in 1979. Again, this is before we had all this luxury of computers and all this technological advances. And he's trading today, even though he does complain about how tough the markets are. So I use these two examples of people that have traded not for years, but decades. And that's given me a strong level of confidence. And then I look at managers like I showed you before, Milburn, who's been trading since 1977, or, again, Salim Abraham from 1988. And my simple thought is, they can do this, I can do this, and I'm going to be able to teach you how to do this. I've also back-tested my methodology. Simple, robust ideas actually work. And with filters, we try to mitigate some of the drawdowns. So let's jump to some charts so we can actually get to some of these ideas that I think are very important. Basically, hold on, let me see if I can move this. 1 second. I want to be able to show you the chart. 1 second, bear with me. Okay. What we have right now, we have Apple. Everybody loves Apple stock. And Apple is kind of going through a little bit of a process right now. But what we do is we have two ideas. One is called a trend breakout. One is called a trend retracement. The actual entries are very simplistic. They're not what's going to help you succeed over time. What's going to help you succeed over time is, one, knowing what to buy, how much to buy, and when to exit with a profit or a loss. But let me just give you a little quick example of Apple, and this is like a real-time example. Apple was one of the strongest stocks at the time when this trade happened. And the reality is we want to buy the strongest stocks if we can put on a low-risk bet. And what the low-risk bet means in my terminology and what we teach is that you're not risking more than 1% of your account to see if the trade will work. The other reality is I think what you have to do is watch my wording if the trade will work. It isn't if we make money, we lose money, the trade wins, trade loses, because everything, it's almost like the power of words. But the example is Apple, you took a trade. You didn't know it was going to work, and it actually did work. And it actually had an exit, which, let me try to move this to the other side. It exited right here, which you can see was a recent one. Now people are vacillating. Should they be in Apple? Should they be out of Apple? What should they actually do? Well, according to this methodology, you should be out of Apple. And the other interesting fact, which also I teach you, is there's a very strong divergence here. And divergences are a very, very powerful tool because you have higher highs, yet you have lower lows on the MACD. It's a forebearer of possibly some negative times. And you can actually see that. Let me wish I could kind of minimize this a little bit, but do like this. If you can see my screen, you are high here. And yet, once you got to the MACD, it started to trace some internal weakness. This is one type of trade. It's just a trend breakout that we do. Not just the trend, not just the value. It's we teach how to handle the emotions, how to handle the ego, how to fear, how to handle the greed, how to handle, basically, we're your coach that you're not going to feel the greatest at times when you're going to have 4 or 5 or maybe even greater times where it don't work. And this is the point where 90% of the traders quit and they try to find something else and they end up failing. I'm going to show you another type of trade I do. This one was an actual trade I took, Herbalife. It was one of the strongest stocks in my tactical universe, how I identify. Again, what I want to do is I want to buy the strongest stocks. I want to sell the weakest stocks if I have a low-risk bet. And as you can see, I had a bet right here. You can see I had a trade. Let me kind of shift this. Had a trade right here to take this breakout trade. And I also had some retracements here. So I was feeling pretty good. I said, you know what, hey, this trade might work. And then lo and behold, within 2 days, I got taken out. Small loss. I lost 0.5% of my account. And here is to teach you, hang on one second, I want to show you here, the importance of having a stop. Because what happened yesterday with Herbalife, they had a conference call, and David Einhard from Greenline asked some very pertinent questions, and basically, Herbalife fell out of bed. It went from a high of 70.40 down to 51.93. So if you didn't have a plan, and if you weren't really watching what was going on, you could have incurred a very large loss. So this is the importance of having risk management. This is just one level. We have multiple layers of risk management, but you can see right here how you got taken out of this trade, and I got taken out right here, and you would have avoided this big drawdown here, which is just ugly, absolutely ugly. The other thing I want to point out, and I don't take too much time in this because I want to make sure that I have time for your questions. Again, because really what my goal is, this isn't like the Andrew Abraham show and just teaching. I want to hear what you guys need. I want to understand your needs. I want to understand how I can assist you. But there's a very important point that I think is paramount to our conversation that I brought up a second ago. This is the Dow, and you can see how it's going up. And today the Dow's experienced a little bit of weakness. But what's fascinating is you can see from this point when most people were pretty scared of being invested in the stock market towards the end of 2011, stock market came back and basically took off. I had a conversation with someone today, and I also want to throw this out there too, is you can schedule a call with me, and one of my colleagues will join us. And again, this doesn't cost you anything. We're here to discuss with you, to hear you, and to understand where you're struggling to help you. But I had a conversation with a gentleman who refuses to be in the stock market, yet wants to make money and wants to know when it's okay to invest. And I said there's no holy grail, and I said we use methodologies. But the idea is he missed this whole up move. He missed a lot of up moves. But where we are right now is we're seeing a strong divergence in the Dow Jones, which could be, because again, we're dealing in probabilities, a purveyor of possibly some negative times. And you can see it right here. We had higher highs here, and then we had high, and our NACD was going down, going down, going down. So I just want to make you guys aware of that. So if you're trading the stock market, that you need to be very aware and make sure you have stops, because again, when you trade, there is no free lunch. There is volatility. There is a tremendous amount of risk. So that's one chart. I want to show a chart from today. And this is another kind of trade that I do. Kind of tough to see. Let me see if I can do it this way. 1 second. Let's do it this way. Hopefully everybody can see this. As I said, I have two types of trades. I have a trend breakout with a whole vast group of filters, which we teach you how to use these filters. And then the other type of trade is a trend retracement. And this is a perfect example. Chesapeake Energy, it's been in the news. It's been getting pretty much clobbered. Here you can kind of see it went from, let's tighten it up here. Well, if you went from 35 down to, well, 17. So it's about a 50% drop. So it hit my radar screen. It's been hitting my radar screen, and I was trying to figure out, how can I get involved in this? And again, my way of getting involved was a trend retracement, which was exactly here today. Or actually yesterday, my light bulb turned on, and I wanted to put on a low-risk bet here. But unfortunately, I wasn't able to. The stock of Chesapeake gapped down, so I avoided this trade. And again, everything is about risk. What I learned from my grandmother, like in life, everything what she would say was like railroads, the cars. They're always coming. You're always going to have trades. You never want to take more risk on any one trade. You want to follow your plan. You want to be consistent. And that's what myself and my colleagues do, is we try to teach you, as long as you want to internalize it, what you need to do to be consistent and successful over time. I'm going to turn the floor. I want to hear questions. Again, my goal is to really assist you guys and not make it the Andrew Abraham show on trend following. I mean, there's much more to trend following this, but I want to hear some of your questions. So I'm going to open the floor to questions. And if you guys if you want to shoot over some questions, I'm here to listen. Let's see, anyone have questions? Or otherwise I can continue. I can keep on. There's plenty to teach. If you guys want to shoot over some questions. Just give it a minute. Okay, doesn't seem that many questions. Oh, okay, here we go. Here we go. Whoops. Someone asked when I'm releasing my book. Two issues. I just want to make sure all of you have, there's a 40-page manual or a prescript of my book that you can download from the website, from trendfollowingmentor.com. The book that I've written with Wiley should be out. I'm hoping, I mean, it's done on my part. And I spoke to them today about the cover and the title and all that kind of good stuff. I'm hoping it should be late summer, early fall. And what I want to call the book, or what I suggested to Wiley Books, is I call it the Bible of trend following, because it's everything that you really need in order to be successful over time. And for those of you who haven't read the foreword from David Drews, he wrote in there, and David Drews is he's a trend follower. He's managing I believe it's about 130 million or maybe even more. He's been managing since the 80s. And he wrote the foreword to my book. And he wrote that he wishes that he had read my book when he first started. And if any of you do not have that foreword, I can email it to you. I posted it on the blog. Let me see what other questions we have here. Okay, MAC is a good indicator. What do you think of the parabolic? That's from Dunn. Let me say it like this. The biggest issue that I really think that you guys need to focus on isn't searching for indicators or systems. Simple ideas work. Simple ideas can compound money over time. I had one of the things that comes up that I think is pretty interesting is I have this question posed to me many, many times. Why am I teaching? And one of the points is it really helps me in my own trading. And going back to this thought of indicators and systems, I had, and again, I do one-on-one webinars with you in order that we can really get to the crux to help you to succeed. I had a webinar with a student who was in Australia, and he was an engineer, and he designs helicopters. And it was really cool for me to hear from an engineer that the idea is less is more. And he was really excited with the idea of not searching for all of these holy grail indicators and systems and methodologies, and the idea of keeping it simple. Because he said to me that the more moving parts on a helicopter, the more apt there could be problems or more maintenance. And it's the exact same thing when we're trading and we're trying to trend follow. So again, I don't think there's any magic indicator. I think that the idea has to fit your personality. And in our teaching, myself and my colleagues, we give you our tools. And we want to hear from you what you think, because these tools will only be valuable is if you internalize them and put them into your own perspective and into your own risk tolerance. Let's see. Okay. Have you back tested, or do you have any suggestions for back testing software? This is from Tish. Two issues. As I expressed first, I'm a believer. And the funny thing is I become more of a believer when my wife asks me, do you think trend following is ending? Because every time she says that, I end up having a nice bounce. I remember vividly in 2010, after about a year and a half of not making any money. 2009 really wasn't that great. Nothing happened. And we were on vacation, and she thought I was crazy for keep on trading. I mean, I get up at 5 o'clock in the morning, I do my work, put my orders in, and all of a sudden I stumbled into some great trades, and pretty much that made my year. But the idea of back testing, I hold with a grain of salt, because back testing, depending on how you do it, can be optimized and made perfect. I like doing simple, robust ideas with full of risk management and money management. But yes, I do back testing. I use two products. I love Metastock because to me, I've used it since 1994. It's simple, it's easy. And then I use another product called Trading Blocks that pretty much you can test, you can build ideas. Either one of these I suggest, and I can help you with also. Okay, have you seen any problems with low, specifically with divergencing calls that never happen? Well, guess what, David? This is the reality. Nothing is perfect. There's going to be, at a minimum, 50% of your trades that don't work, and that becomes part of it. That's why our goal is to take small bets. And again, when I'm talking to traders, and this is the whole reason why I've made trendfollowingmentor.com, which is just to me so cool. I gain different perspectives from people. One guy, when I was talking to him, we were talking about risk per trade. And when I say, well, my comfort level is a 1% risk. And he goes, that's like bites out of an apple. That means you have 100 bites out of the apple. And I just had a conversation with, actually he's a basketball player who just retired in Chicago, and he's been trend following. And we were talking about the risk that he was taking. And he was taking between 2 and 3% risk per trade. And I said to him, you got to think of it bites out of the apple. I said, at a 2% risk, you get 50 bites out of the apple. At a 3% risk, you got 30-some-odd bites. And the other reality as a trend follower, as I can promise you, you're going to have many, many trades that don't work. So that's why I adhere to trying to keep the risk per trade rather small. Okay, this is a great question from Ted. Yes, Ted. Whoops, hold on one second. It just kind of moved a little bit. Yes, I 100% agree with this one, and I do multiple time frames. I use multiple time frames in my retracement strategy. And again, some of this isn't just my beautiful thinking. It's from just being years and years trading and trying to find simple ideas that fit my personality. So I do use multiple time frames. There's an article that if you guys want to email me, I can send it to you. It was in Stocks and Commodities magazine. I think it was in 1998 I wrote about it. It was about trading multiple time frames, and it is extremely beneficial. And let's just jump to that real quick, if I may. Here we go. This is the daily chart on Chesapeake. If I go to a weekly, which I'm doing, hopefully it'll go quickly, you can also see on the weekly that I'm down. So on the daily and the weekly, I'm down. But on the daily, I had a pullback. This is the perfect example of what some of the ideas that I teach with a retracement trade. I'm waiting for situations like this to try to put on low-risk trades. Okay, this is from David. Do you have in your methodology any way to estimate drawdowns with a given per-trade risk level? David, yes, but I'm going to say yes and no. First of all, I'll tell you this. Your worst drawdown is always ahead of you. There is no way to avoid losses, or at best, what I try to do is try, and I'm going to underline the word try, to mitigate drawdowns. But I'll tell you this, depending if you're trading stocks and if you're trading futures, it all depends on your personal preference level. I mean, I've been doing two things when I've been trading commodities. I've been doing my own trading since 1994. I've been also allocating to trend followers that have been around, again, like Salim Abraham. I've invested with him. He's been around since 1988. And I showed you that he basically, if I'm not mistaken, 17 times the money from 1988. And I wish I had invested with him in 1988, which I did not. It's been years ago, but not since then. But I'd say this. Any trend follower in managed futures, you're going to have a drawdown probably in your high 20s, probably in your 30s, and there'll probably be a drawdown even worse than that. In the stocks, I have some actual filters that I teach in order to mitigate some of these drawdowns. But again, nothing is perfect, and we have to accept the uncertainty, and I'll really underline the word try to mitigate the drawdowns. Let's see. Let's see what Ted has to say. Well, okay. Ted's looking for the Holy Grail. I'm sorry, Ted, but there is nothing perfect. Everything works with trend following, and everything works on every time frame. The reality is, it's not the markets, it's not the time frames. It's really knowing which, let's say, attributes or which members of the futures we should be buying, or which stocks we should be buying, or which currency we should be buying. And one of the things that I teach, or my colleagues teach also, is knowing what to buy. The time frame, it really has to boil down to you. And really the idea is that was more, let's shoot to me. We don't need the screen right now. Let me see if I can shoot to me, if I can. I'm not sure how I can get me on here, so you can actually see me talking. Let's see, stop sharing screen 1 second and let me keep on going. Let's see if I have a choice. Well, I guess here, I want to do the, no. Well, you know what, I'll just keep on showing you guys the screen. Sorry about that. But there isn't any actual perfect anything. David has another question. No, 1 second, I saw that one. Let's see if there's more questions. Working as a broker. No, I was never a broker. Actually, I was an associated person with a firm, and the only reason I was an associated person, and this is kind of how I came across the dentist, was when I started in 1994, I wanted to understand who was making money and what they were doing right. The reality is, and I love this, I mean, this is how I kind of look at it, I call traders two things, the 90 percenters, which are those that don't make money and lose money. And then there's the 10 percenters that are consistent and over time make money. And the question is over time. It's not every day, it's not every month, it's not every year, but as I showed you, like with some of these trend followers that have been around for decades, they make them year in, year out. One year they might make 20%, the next year they might be down 5%, one year they might be at 15%, they might be down 10%, and then they might be up 30% or 40%. You have lumpy returns when you trend follow. It's choppy. If you want consistent returns, I can think of one man, and he's in jail. His name is Madoff. This is what trend following is. It's not easy. This is the hardest part. It's like, you know, there's the stories of the turtles, and I've known some of them, that basically they had 2 weeks of teaching, and you could put all the rules on the back of a card. Well, on my business card, I have my rules. The hardest thing is to follow the rules, and that's really the essence of trendfollowingmentor.com, that myself and my colleagues, we're going to, you know, if you want to sign up and be one of our students, you know, we're going to teach you. And then we also want you to send us your trades. We want to talk about your trades. Like, I've heard issues like from people and saying, I got bored. I exited the trade because I was bored. And I'm like, what is that supposed to mean? So, I mean, you know, this is the idea, is that we instill in you the proper mindset and the proper attributes in order to be a successful trader over time. Let's see what else, some of the other questions. I want to see if there's any more questions. Let's see. I'm just taking some of these out so I don't miss some of them. Okay, it doesn't really seem that we have any more questions at this point. If you want, I can continue. I can just, you know, we have some more time. We have about another 20 minutes. I can, oh, here. Someone asked this one about an add-on for Meta. 1 second. Okay, here's some other good questions. 1 second. I like doing the questions if everybody's okay with that. Let me just clean out some of these so I miss them. Okay, here we go. Will Metastock provide an add-on trading system in the near future? Metastock, I'm going to give you, if you become a student, I have the add-ons that I give you. I want to say this, Russell, that don't get too excited. They're not the Holy Grail, because one of the biggest differences when I started back in 1994 is once I stopped looking for the Holy Grail, then I started succeeding. I started being consistent. These are basically simple ideas that have the propensity to work over time. And I give you them. We go through them. They're almost like it's a conveyor belt of, before you take a trade, it's a conveyor belt of ideas. Can I do this? Yes or no. Can I do this? Yes or no. Can I do this? And it goes through a vast list of different ideas. And once you get to the end, then you can take the trade. But I want to make a very important issue. Because that you go through all these parameter filters, it doesn't mean the trade's going to work. Any trade is still 50-50. And that's why we try to mitigate our losses. We try to keep our losses small. But the reality is, like with Apple, and I think this is a great chart to show, anything can happen. Let's make this a little bigger. As you all know, Apple was going down and had this huge pop-up. Stocks gap. Futures gap. Futures go limit. Futures go limit lock, and you can't get out of them. This is the reality. So that's what I'm saying. We try to mitigate the risks. This is Tim's question. Selecting what do you trade? You look at the correlation. Excellent question. Excellent, excellent. Everything boils down to risk. Everything I look at is I look at the risk level on the individual trade. I look at the sector risk and the correlation in the sector. I look at correlation of all my positions in my portfolio, or I look at my open trade equity versus my core equity at every waking moment so I don't violate it, so I don't have a surprise. So that's one of the issues. I'm so glad that you brought this up, that we talk about correlation. Let's see what else we got. This is Mina. Mina, I appreciate you contacting us. I've seen you on Facebook, and you know, this is what the key point is. There is no best loss exit strategy. There's nothing perfect. What we try to do is we try to do our best, and it has to fit your personality. What fits my personality is what you can see is this green line right here. There was an article that I wrote in Stocks and Commodities magazine, and I called it the trend rider line because it's a volatility-based average true range type of stop that keeps me in a trade, yet takes me out when the trades don't work. Again, is it the best? I don't think the best exists in anything when we're trading. All we're really dealing in is possibilities and probabilities and ideas that you're comfortable with. And the idea is, this is part of that add-on from Metastock. And I like Team Metastock because it's just simple. It's clean. It's easy. Let's see what else we have. 1 second. How many programs teaching how to trade? What's different about yours? That's a great question, Martin. I'll tell you, I go through the internet. There are millions of guys that are teaching. And I'd say that when I look at them, I don't know if they've been trading as long as I have. And I'll say this humbly. I probably made every mistake possible. And through those mistakes that you guys can benefit because you can learn from my mistakes. I trade, I manage money, and I do this professionally. And I guess the whole reason why I'm teaching, it comes back to a couple reasons, which, again, I've had this question. If, someone said to me, if you're so successful, why do you teach? First of all, it's pretty cool to talk to people all over the world. I'm in contact with people from Bulgaria, from Australia, from India, from Oregon. I mean, it's the whole globe, South America, and you get to talk to people. And what kind of helps me personally is, and I don't care which money manager it is, everyone has their demons. That trend following is tough. That you're going to go through periods that you're going to have drawdowns. And you're going to have periods that trade after trade doesn't work. I'm going to show you this. Let me just show you this one real quick. I got taken out of this trade today. Hopefully it'll open. Trying to open it. This is the Aussie dollar. I got into the Aussie dollar. It's going really slow. It's almost fun. I had a buyout. I had a breakout trade right here. Hopefully you can get. And immediately it turned down, and the trade didn't work. So when I'm talking to you guys, it kind of helps me to just keep my head straight, and because it is a battle, and it's not easy. And let's see here. Let me just see what other questions are here. We can hear you. What's different about mine? Mine's the real deal. Just finishing up with Martin. I'm not telling you that this is rocket science. I'm not telling you this is a holy grail. I'm just telling you the truth, what trend following really entails. And it's a marathon. It's very tough. That you're going to have drawdowns, and you're going to go through periods where you're going to question it, and hopefully you're going to stick with it, because that's really what the goal is, to have people that are on your side, that people that can guide you, people that you can trust to keep you through the tough times. Let's see what else I got. Other questions. I think I answered this one with Tish. How do you stay motivated and confident during periods of long drawdowns? I don't have a choice. I have a wife, 3 kids, a golden retriever, and a quasi mutt that I have to support. So failure is not an option. Giving up is not an option. That I know drawdowns and tough periods are all part of it. And I think I answered the question, how do I stay motivated? I talk about it. I've been writing my blog, which is called myinvestorsplace.com. I've been writing with that since 2008. I decided to teach to help me stay confident. But again, nothing's perfect. Let's see. How do you cope? Okay. How do I cope? I think I answered it. Because I know that my biggest profits are right after my biggest drawdowns. And right now I'm in an ugly drawdown. I haven't made a profit since November of 2010 when I just completely hit the ball out of the park. I made a ton of money with silver and cotton. Cotton was just a shocker, and sugar. And it's not that I did anything different. The whole idea is to be consistent. And there's years that it's a lot easier. And then there's years that are just unbelievably tough. Like 2005 and 2006 where I had a double bottom drawdown, which I was probably in the 30% range, which was just no other word but ugly. But you know what? This is reality. You know, someone asked about, about what makes me different than other teachers. I'm telling you the truth. I'm telling you the reality of trading. I'm not telling you that this is easy. I'm not saying that you're going to be a day trader or an e-mini trader and you're going to get rich overnight. This is a process. And again, it's really not that easy, but we're here to help you and help ourselves to get through this. Let's see what other questions. I think I answered this one. Have you looked at ATR entry into an off trailing stop? Great question, Ted. My trend rider trailing stop is based on an ATR. It's similar in nature. Again, it just fits my own personality. There isn't that much of a difference. I think ATR trailing stops are very, very good because they adjust for the volatility. I commend you for that question. That's a great question. Pyramiding. Well, again, no free lunch. You can pyramid, and the reality is at times you're going to be a hero, and then the other times it's just going to be beyond ugly. That you're going to have drawdowns that you would just unbelievably, you can get nauseous over. Everything really boils down to your own personality. I have one CTA who I invest with. I've invested with him for years. That's exactly what he does do. If the position does work, he adds to it. But the interesting thing is how much aggravation do you need to really go through in order to, say, compound money. And what's interesting to me, what I've learned looking at his results versus my results and other traders' results, they're pretty synonymous. On average, I'd say a lot of the guys and myself were on average about 15% plus minus over time. And again, when I put that 15% over time, what's pretty cool about it is it means over 10 years, you get 4 times your money. And the whole idea of compounding money is over 15 years, you 8 times your money. So that's really what our goal is what we're really trying to do is compound money and use a very simple, robust idea in order to do so and to stay in this game or this marathon. Let's see what other questions we have here. Okay, you quoted Salim Abraham. Mine, you can actually go to my website. It's abrahamcta.com. You can see my results. Actually, once I became licensed from late 2009, my results are up there. Prior to that, it was all proprietary. It's proprietary right now, but it was kind of mixed between other things, so it wasn't actually segregated. But you can actually look at my returns. There's periods that are great, like 2010 I did great. 2011 I didn't do so good. But again, it doesn't matter. Any one year, any one month, any one day, none of it really matters. Let's see if we have other questions. Well, it doesn't seem we have any more questions. We're almost out of time. What I want to say, just a couple more closing points. First of all, I want to thank each and every one of you. I know your time is very valuable, and you want to learn, and you want to improve your trading. And I would tend to believe that there's issues that you're looking to overcome. This is the reason why I've made trendfollowingmentor.com, that myself and my colleagues that we're personally here to help you, that we do one-on-one webinars, that we look at charts, we look at your charts. Again, we have another like 8 minutes. If any of you guys have charts you want me to pull up, I can pull them up also. But really what the goal is of myself and my colleagues is to really understand your needs, to spend time with you, to answer your questions, to help you get to where you want to get to. And again, I invite you personally. You can send me an email to andrew@trendfollowingmentor.com. We can schedule a time. It doesn't matter where you are in the world. I mean, I have conversations with people from Australia to India to you name it. And we have one-on-one calls, and they're free. It doesn't cost you anything. You decide if you feel comfortable with me and my colleagues, and if you really believe that we can help you, and if you trust us in order to help you. And pretty much, I thank you again. I invite you, if you haven't downloaded already, from the Trend Following Mentor page, the free 40-page material, as well as I invite you to read my upcoming book. I put my all into it. that will give you an understanding of what it takes for, you know, what to be successful over time. So again, I thank you guys. And again, if you have any questions or anything that, you know, I can help you with, please contact me. I'm here to help you. Any last questions? Let me just see. Anything else? I see people thanking me. Thank. I have this one. Let's go. Okay. Anyway, guys, I greatly appreciate it. And just let me know how I can help you. Thank you in advance.